Hello, I'm Paul Hutton, President of Hutton Wealth Management, and it's my pleasure to welcome you to the 2021 Investor Outlook presentation. Today's agenda is pretty straightforward. First, we're going to share with you a review of the equity markets, and then we're going to discuss the 2021 outlook for investors. Before we begin, it's important to review that there are 5 key areas of financial planning. They are preservation planning, retirement planning, tax planning, estate planning, and investment planning. As a comprehensive wealth management firm, we try to always consider the impact of any recommendation that we make, not just on one of these areas, but in all of these areas for our clients. Today's presentation is going to be primarily focused on the investment planning and the equity markets. As a quick review, the U.S. stock market ended 2020 at all-time highs. After a waterfall drop and the quickest downward decline in the century in March of 2020, fueled by the largest federal government stimulus ever, historic support from the Federal Reserve, and optimism about how quickly the economy is likely to bounce back, the S&P 500 stock index. This is the most widely watched barometer of the equity markets, finished 2020 up more than 16%. The fact that a pandemic-induced economic shutdown of epic proportion was absorbed by investors and the year ended with stocks at a higher level is historic. In March of 2020, investors saw the stock markets plummeting more than 34%, starting a bear market. That bear market turned out to be the shortest downturn in U.S. history. Since the U.S. stock market bottomed in March of 23rd, the S&P 500 has risen 68%, shattering all records along the way. Clearly, investors who stayed the course were rewarded. While the equities climbed higher from their March lows, not all stocks recovered to positive territory. In fact, as you start analyzing the year-end market highs, gains in Apple, Amazon, and Microsoft alone accounted more than half of the S&P 500's 16% total return for the year. If you remove the top 24 performing companies dominated by tech and digital services, the S&P 500 return for the other 476 companies would actually be negative for 2020. Interest rates were not much help to investors either in 2020 as they started 2021 at or near historic lows. The Federal Reserve Chairman announced again at their December meeting that interest rates would stay close to zero for the foreseeable future. Congress also acted aggressively, approving a $3.5 trillion emergency relief and stimulus measures in 2020. This was the largest action in the face of a recession in the U.S. history and provided some of the biggest aid packages in the world. Entering 2021, as this chart shares, interest rates are at 0.09 for the average bank money market and 0.16 for a 12-month certificate of deposit. Both of these rates clearly are less than 1% and can be very unattractive to income-seeking investors. Perhaps nothing has been more puzzling than the disconnect between the equity markets and the economy. The markets rebounded reflects Wall Street's optimism about the prospect of 2021, but it also accentuates the disconnect between the stock market's wild success and struggling American households. Wall Street is at an all-time high, but many places are still experiencing shutdowns, high unemployment, and overrun hospitals and economic hardships. Sadly, many of our friends and family and local businesses like restaurants, gyms, and small shops may never recover or reopen. Everywhere you turn, you're reminded there is a deadly pandemic that is responsible to date for more than 340,000 American deaths. And it has also left millions jobless and hungry. In fact, as these statistics share, as of year end, the COVID-19 daily cases, daily deaths, and hospitalizations were all peaking to their highest levels. There is great optimism in the equity markets about how quickly the economy is likely to bounce back in 2021 as the corona vaccines become more widely distributed. Investors are focused on the future, and the stock market is priced as forward-looking indicators. Also, stocks remain appealing for many investors because interest rates are so low, making equities more attractive than other assets such as bonds. Our goal is to make sure that your investing plan is centered on your personal goals and timelines. So for this year, caution is still the principal notion for all of our clients. Let's take a look at the 2021 outlook. As we begin this new year with a new administration in Washington, D.C., my role as a wealth manager includes reporting and analyzing political activities and relaying how the new administration could impact the investment world. While all changes need to be monitored, some specific things that we keep a watch on are future stimulus packages, suggested tax increases and how that may affect your portfolio, vaccine distribution, and trade agreements with key nations such as China, Britain, and other nations. Many investors are wondering how the Democrats' first 2 years of presidency, House of Representatives, and even the Senate, which allows the vice president to preside over ties, are going to affect the equity markets. While history is nice to look at, it's never a telltale sign of the future. However, during 10 previous periods of similar circumstances that date back to 1949, 8 were positive out of those 2-year periods of time. So for 2021, we are going to be carefully monitoring public policy and the new administration. So let's take a look at what the analysts are forecasting for 2021. The stock market enters 2021 pretty favorably. Barron recently surveyed 10 market strategists and chief investment officers at large banks and money management firms on their outlook for the year. Averaging the year-end S&P 500 forecast, which ranges between 3,800 and 4,400. The group expects the index to rise at least 9% for the year to about 4,040. Add a dividend of about average dividend of 2% to their forecast, and you should see the stock market return between 10 and 11% for the year. This panel also predicts that the U.S. economy is going to grow by about 5%. That's their expectation. That's the fastest rate since 1984. That would be healthy following a year which the gross domestic product plummeted by 31.4% in the second quarter. And as the pandemic gripped our country, it soared to 33.1 in the third quarter. While this forecasting is optimistic, we like to remind you that we consider your feelings about risk and the markets when reviewing your unique financial situation and making recommendations for you. There is great optimism about how quickly the economy is likely to bounce back this year as COVID-19 vaccines become widely distributed. However, for 2021, there are still many uncertainties. Major risks include the potential damage that can be done if massive vaccination campaign in the U.S. does not run smoothly or quickly, as investors or the market are expecting. Also, there's still a major risk to the economy outlook if the recovery is delayed and corporate revenues and profits fall short of expectation. We're also keeping an eye on higher than expected unemployment over the last several months. 2021 should be an interesting year, and our goal is to be communicative with our clients on how things are proceeding. As a quick recap, remember 2020 was a year that rewarded discipline. Interest rates are at an all-time low. There is a disconnect between the economy and the equity markets. A new administration brings new challenges, but it also brings new opportunities. The effect of the COVID-19 is still critical to investors. Also, caution and vigilance are critical. You should always focus on your personal goals and objectives, and always call us with any concerns. Legendary portfolio manager Peter Lynch reminds us, you get recessions, you have stock market declines. If you don't understand that's going to happen, then you're not ready and you won't do well in the market. So what can you expect from us? One of our main focuses is to review changes for our clients on an ongoing basis. You can expect regular communication, more frequent discussions, and you can expect that we are continuously reviewing economic, tax, estate, and investment issues for our clients. In fact, we will be offering workshops that focus on tax changes and planning ideas throughout the year. Thank you so much for listening to this workshop. We deeply appreciate the opportunity to assist you with your financial needs. Remember, at Hutton Wealth Management, our clients come first. Your health and well-being is our highest priority. We appreciate our clients. As our client benefit, you can add names to our distribution list for viewing this workshop. We hope that you will take advantage of this and pass it on to your friends and add 2 names to our list. One of our goals in 2021 is to continue to help others. Some of our best clients are referred to us by our existing clients. Who do you know and care about that can benefit from the work that we do? Again, our goal is to keep you informed. We thank you for watching the update. Best wishes for a great and healthy 2021. Please call us if you have any questions.